Good morning, I'm Robert Tan, sitting in for Mikey Oreta. This is Business 360. From markets to policy, from Manila to the world, we cut through the noise so you can navigate, adapt, and lead in a changing economy. Inflation holds in January 2026 as power and produce prices ease. Steady data opens door to further Bangko Sentral ng Pilipinas rate cuts. Bangko Sentral ng Pilipinas warns banks on virtual asset service provider exposure, tighter risk controls urged amid rising money laundering and terrorist financing threats. Philippines ranks second in global banana trade. United Nations Food and Agriculture Organization reports export gains strengthen Asia supply leadership. Energy regulators move against Solar Para sa Bayan Corporation. Show cause orders threaten Leviste-led firm over costly power rates. Securities and Exchange Commission files criminal case against Manuel Villar and Villar Land. Market manipulation and insider trading charges raise corporate governance stakes. Inflation is not falling, not rising, but standing still. And that stability may be the real surprise. Inflation is likely to remain steady in January based on the median estimate of economists as lower electricity rates and cheaper vegetables offset higher fuel costs and rising prices of other staple foods. That balance keeps prices pressure contained and gives the central bank room to cut interest rates further if conditions warrant. Economists expect the consumer price index to come in at 1.8% for January 2026. If confirmed on February 5, the reading will match December's pace and fall within the Bangko Sentral ng Pilipinas forecast range of 1.4% to 2.2%. It will also mark the 11th straight month inflation stays below the BSP's 2% to 4% target. BPI lead economist June Neri says easing utility rates and lower vegetable prices are offsetting higher fish and rice prices, elevated global oil costs, and more expensive cooking gas. Steady inflation means breathing room supporting household budgets while giving policymakers flexibility to steer growth without reigniting price pressures. The Philippines is hitting pause on crypto, but only to keep the system safe. The Bangko Sentral ng Pilipinas tells banks and other supervised financial institutions to tighten risk controls when dealing with virtual asset service providers, warning of heightened money laundering and terrorist financing risks. In its January 30 memorandum, the BSP mandates strict due diligence and says transactions are allowed only with VASPs registered with the central bank or authorized by the Securities and Exchange Commission, including foreign partners. It also bans dealings with unregistered or unauthorized VASPs and bars Philippines retail customers from directly accessing offshore platforms not cleared by the BSP or SEC. The advisory comes as the BSP maintains its moratorium on new VASP licenses, prioritizing financial stability and consumer protection over rapid digital asset growth. For the Philippines, this means stronger safeguards for investors and the banking system, even as the global crypto market continues to expand. The Philippines is back on top, but this time in bananas. According to a United Nations FAO report, the country emerges as the world's second largest banana exporter in 2025, reclaiming ground lost in previous years. Shipments surged 26% to nearly 2.93 million metric tons, making the Philippines Asia's top supplier behind Ecuador. Key markets include Japan and China, with Japan sourcing 75% to 80% of its bananas from the archipelago. Agriculture Secretary Francisco Chulaurel Jr. says the government is pushing for lower Japanese tariffs to further boost exports and support the local banana industry. For the Philippines, rising banana exports means stronger agricultural earnings expanded market reach, and a revival of a key global trade position. Foreign investment is building more than factories, it's building jobs across the Philippines. Two Thai companies are expanding operations in the country, with expected investments creating new employment in construction and agro-industrial sectors. Trade Secretary Cristina Roque met with executives from fiber cement maker Shera Public Company and food conglomerate Shadow & Pokphand Foods, both already operating locally. Shadow & Pokphand plans to grow its agro-farming, aquaculture, and food processing businesses across Luzon, Visayas, and Mindanao. Shera Public aims to increase fiber cement production nationwide to supply the entire country. The Department of Trade and Industry says the government will support these expansions, highlighting the potential to generate jobs and strengthen local industries. These moves mean more employment opportunities, stronger domestic manufacturing, and deeper ties with key regional investors. A building meant for offices is now set to become a powerhouse for the Philippines' IT business process management sector. DM Wenceslao and Associates with subsidiary Asiana Holdings secured Philippine Economic Zone Authority registration for a 14-story tower at 8912 Asiana Avenue. It's their largest PEZA accredited property to date. The new hub will support high-growth industries, create quality jobs, and position Asiana City as a central hub for IT, BPM, and global services firm. PEZA says the sector makes up about 11% of total investments. Wenceslao adds the development could also pave the way for growth in healthcare and medical tourism. The project strengthens global competitiveness, expands high-value employment, and helps diversify the economy beyond traditional services. The most talked about congressman is in hot water. Batangas 1st District Representative Leandro Leviste faces regulatory scrutiny over his solar company's high power rates. Energy Regulatory Commission or ERC Chair Francis Saturnino Juan says solar para sa bayan operated in Paluan, Occidental Mindoro, and other off-grid areas without proper authority or compliance certificates. Rates reportedly hit 18 pesos per kilowatt hour. Despite a 25-year franchise, the ERC stresses charging without approval is a mortal sin. Leviste recently resigned from the board of SP New Energy and Terra Solar Philippines amid disputes and a separate 24 billion peso penalty for failing to deliver renewable energy capacity. This signals stricter enforcement in the energy sector and that even high-profile lawmakers must comply to protect consumers. After years of underperformance, the Philippine economy may finally surprise. Analysts see a 5% rebound in first quarter of 2026 thanks to early local government budgets and softer inflation. The University of Asia and the Pacific says its earlier forecasts underestimated these signals. GDP could top 5%, not just in quarter one, but for the full year, following a weak quarter four 2025 growth of just 3% and a 4.4% full-year expansion, 3 years in a row below target. Infrastructure spending may stay subdued, but the Bangko Sentral ng Pilipinas now has room to consider another rate cut. This could mean a cautiously stronger economy with relief for households and businesses if growth gains momentum. Public works in the Philippines are stalling when the country can least afford it. Government infrastructure spending plunged 45.2% to 48 billion pesos in November, marking the fifth straight month of decline. The Department of Budget and Management says probes into anomalous projects slowed the rollout of public works and delayed contractors' payments. From January to November, infrastructure spending totaled 991 billion pesos, down 16% from the same period in 2024. The slowdown contributed to a 16-year low GDP growth of just 3% in quarter four. Total national government disbursements, however, rose 2.5% to 5.4 trillion pesos over the first 11 months, showing that other spending still pushed through. This means key projects are lagging just as the economy seeks a rebound potentially slowing job creation and growth in 2026. We're taking a quick break. More news and the context behind it when we return. This is Business 360. Philippine exporters warn a new customs system could hit them where it hurts. Fees may jump from as low as 18 to 55 pesos to 300 pesos per entry. PhilExport President Sergio Ortiz Luis Jr. says the higher charges could threaten export competitiveness. The group urges the Bureau of Customs to conduct a regulatory impact assessment and consider subsidies to ensure modernization benefits traders. Ortiz Luis also calls for another public consultation to review costs and avoid duplicate or unnecessary fees. This could slow trade and raise costs for exporters just as global markets demand speed and efficiency. The Bureau of Customs is signaling confidence that it can exceed its 2026 revenue target, even as the peso remains volatile and global trade faces uncertainty. With forex swings affecting import valuations, rise tariff cuts, reducing collections, and enforcement reforms underway, the question now is what's really driving customs revenues and how sustainable these gains are moving forward. The BOC is also set to auction 10 luxury cars seized from contractors Pacifico and Sara Discaya on February 11, including high-end vehicles like Rolls-Royce, Bugatti, and Bentley models. And joining us is Vincent Philip Maranilla, Assistant Commissioner of the Bureau of Customs, to give us a frontline view of how Customs is navigating forex volatility, policy shifts, and operational challenges in 2026. Good morning, Vincent. Welcome to the show.
Good morning, Robert, and good morning to all your viewers.
Now, sir, the Bureau of Customs is set to auction 10 more luxury cars seized from contractors Pacifico and Sara Discaya. Now, can you give us an update on the auction and how these cars were originally acquired and whether there were any irregularities in their procurement or use?
Yes, so as we mentioned before, during the first auction of the first batch of the Discaya cars, there will be other batches that will be auctioned off. We just tried to auction off the very first ones, which the violation of which we found to be very glaring. Now, the second batches have already undergone legal procedure for its forfeiture, and they're now properties of the government and are up for auction again. So we will try to maximize the value of these cars and recover as much amount from them to be able to return to the coffers of the government. The second batch, of course, includes the two cars that were not auctioned in the first batch. These are the high-end cars, which are the Bentley and the Rolls-Royce, coupled with some other cars that have already undergone legal proceedings and have been forfeited.
Now, with vehicles like a Rolls-Royce Cullinan and two Bugatti Chirons on the list, how does the BOC determine their starting bids and what measures are in place to ensure transparency in the auction process?
First, the auction process is published. Not just that, it's also live online. No? Just like what we did during the first auction of the vehicles belonging to the Discaya couple. So that would be the normal procedure now adopted by the Bureau of Customs. All our auctions will be public. Everyone can view it. So it's going to be very transparent. The documentations will be open to the public, except, of course, for some privacy concerns, including the identity of the bidders, of course, if they do not want to make that public. But again, there are, of course, some national security concerns that would have to give way to some of those information. We're also looking at revising our valuation procedure because that has been a stumbling block in trying to dispose these cars. We do not just follow market forces when we do valuation for these kinds of items that we auction off. No, what we do is we have very specific rules on their depreciation. Right now, the rule is that we allow 16% depreciation per annum and a maximum of five years. So that's about 5 years of depreciation only at 16% per annum. Before, we only allowed 10%, but we try to be more consistent with what the market forces are doing right now in terms of valuation and computing for depreciation. Hopefully, this formula would be akin to the depreciation formula that's being used in the gray market and the buy and sell market, so that the prices of these cars would be more competitive and there would be more interested buyers.
But given the high value of these luxury cars, what safeguards are being implemented to prevent favoritism or insider bidding during the auction scheduled on February 11?
Oh, we do background checks. It's not just one single group or division that actually is in charge of the entire process. These are interrelated to other groups and other divisions, including our enforcement and intelligence division, which does background checks to avoid repeating the instance where it's the smuggler themselves, using dummies that actually bids out and gets these properties, no? Or these cars. So included in the background checks, of course, are the identities and, of course, a financial check on the capability of the bidders.
Now, moving on to a different topic, Vincent. Now, the BOC is confident about exceeding the 2026 target. Now, what early indicators inside your internal dashboards are flashing green that the public hasn't seen yet?
Well, right now we have the volume. I think volume for the first month of the year is up by about 9%. And our collections are also up. We've exceeded our January collection by more than 500 million. And that's a good indicator for the start of the year. Usually there's a slowdown for January because of the heavy November and December volume. But right now, all indications are showing that there's a robust economic trading activity within our ports that allowed us to reach our target. And not just that, we've also improved our system of monitoring some valuation, including under invoicing concerns. No? In fact, for the first month of the year, we've recorded an increase in our rate of assessment, which means that the efficiency in the assessment of goods coming into the country are improving. And there are also safeguards that were in place to capture or at least flag down possible misinvoicing of imported products coming into the country, included in these particular measures are, of course, our continued subscription to publications that provides us an accurate figure on what prices of certain commodities might be, in the trading block. So if we do have those tools and we were able to flag down some items that are declared below those reference valuations, then we're able to at least contest and allow our importers to show proof that indeed that what they're declaring are the actual transaction values. Of course, we're not substituting any publication or reference values to the actual transaction values because that would be illegal. We're just using these reference values merely as a risk management tool, and it has shown to be very effective, which actually allowed us to improve our rate of assessment, improve our the way we do things within our assessment mandate, and reach our collection target for the month of January.
Now, which specific import categories are now contributing the biggest revenue gains? Is it fuel, electronics, food, raw materials? And what does that say about the economy today?
Well, oil products or petroleum products still consists about 30 to 35% of our revenues, no? And that's still very substantial. And of course, included in the top 10 are, of course, food products, motor vehicles are still there, steel products are still there. And by all indications, I think whatever slump our economy was experiencing last year, we're seeing initially for the year a good recovery. And hopefully it can be sustained so that our economy rebounds from whatever slump we all noticed late last year. And we're also hoping that this performance by our economy would boost collections of the Bureau of Customs and help us reach our collection target for this year, which of course, for the very first time, the Bureau is tasked to collect more than 1 trillion pesos.
Now, speaking of collections, how much of your current collections today uplift is volume-driven versus valuation-driven from Forex? And do you track that split internally?
Yes, we track that split internally. I think it's about equal and also co-equal with the rate of efficiency of our collections. Meaning it's a combination of three things. Of course, an increase in volume. And we would not also deny that any increase in the Forex benefits the collection of the Bureau of Customs, because our collection, our valuation, of course, is based on a dollar. It is dollar based. But of course, we've also noticed that even with those two factors increasing, it would not be enough if we don't increase our rate of assessment, and of course, put in place measures that would guard against misinvoicing and other customs fraud.
Now, based on BOC data and your observations, are you seeing behavioral changes from importers because of peso volatility, such as shipment timing, invoice structuring, or sourcing shifts?
That's always normal, Robert. No? I think economic forces dictate how our importers and traders also do their business. And we're prepared for these eventualities because this is not new to us. We do have units within the Bureau of Customs, more particularly the Assessment and Operations Coordinating Group and the Revenue Collection and Monitoring Group, that does predictions for us for these kinds of situations and prepare the Bureau for these eventualities.
And what new anti-smuggling or anti-undervaluation measures are being rolled out this year that were not in place in 2025?
Well, number one, this year, the most important thing for us, I think the priority of Commissioner Ariel Nepomuceno this year is to be able to at least procure a new customs processing system. The system being used by the Bureau of Customs is very much outdated. It's been there since 2009. And as you know, all systems, if you give an IT system just a year, no, there are a lot of improvements already that needs to be made. Imagine us having this particular system for almost nearly 20 years already, and we've only done some maintenance work and a little tweaking. So
are you also looking into AI?
Of course. In fact, we're looking into procuring and improving our scanning systems to include and improve their AI capabilities.
Now, how much revenue leakage do you estimate is still happening annually today due to misdeclaration or undervaluation? And what's your reduction target for 2026?
There's still some, but I don't think it's that substantial anymore. Of course, our parameter is that if we reach the target, that means that we lessen instances of misinvoicing and other customs fraud. But of course, we won't deny that there are still a lot of activities out there that might be involved in evading payment of the proper duties and taxes. So I can't give estimates right now, but all I can provide you is that a clear categorical statement that it has been significantly reduced because of the revenue performance being shown by the Bureau of Customs. And of course, continued anti-smuggling efforts. For last year alone, there are about more than 60 billion pesos worth of smuggled goods that were apprehended by the Bureau of Customs. And that shows our continued effort and vigilance against all forms of customs fraud.
Now, you've mentioned more frequent auctions of seized goods beside the luxury vehicles. Now, what is your projected auction revenue this year? And will auction processes be digitized or publicly trackable?
Yes, that's the goal. For us to be able to make it more transparent, we will digitize our customs auction processes and make it more accessible to the public. And of course, we'll make it more transparent. There are several proposals that we're looking at, including privatizing this particular activity by the Bureau of Customs and just retaining certain customs functions, which by law is sovereign, should be a sovereign function. Like, for example, valuing these goods and so forth. But insofar as the auction process is concerned, the Commissioner is also entertaining proposals to privatize our auction process with the condition that it be made more transparent and be more open to the public.
Now, how closely is the BOC coordinating with the BSP and economic managers on forex movements? Now, do you run revenue stress tests based on currency scenarios?
Very, very closely. We coordinate almost on a monthly basis with our economic managers because they too want feedback coming from the Bureau of Customs. And not just that, our mother department, the Department of Finance, is aware on a weekly basis. We update them on our revenue performance and other key performance indicators. And we participate in a monthly execom with the Secretary. We also report to the economic managers certain activities that we intend to do in order to address certain issues that might come up in terms of us being able to meet our target and, of course, trying to prevent customs fraud. Remember that our economic managers are the one dictating our target and also dictating some policies that directly affect the Bureau of Customs. So it's just incumbent for us to be able to coordinate with them at a regular basis.
And are there any pending policy or regulatory changes you're recommending right now to Congress or executive branch to improve customs collections?
Yes, there are several proposals to amend certain provisions of the Customs Modernization and Tariff Act. That is, of course, after consultation with our stakeholders. These are all driven to improve processing and make the lives of our traders and our stakeholders a little bit better in terms of dealing with customs and of course dealing with some customs rules. We're also trying to come up with some proposals for some sectors that's very much involved in the trade processing and the supply chain that are not purely customs matters but will improve customs performance. Let's say, for example, we need to improve capabilities of our ports in handling more volume. Because even if we have the volume, if the capabilities of our private ports are very limited, then that will not redound to any benefit in terms of revenue collection to us. And of course, would even prevent increase or at least a growth in our economic activity.
And finally, talking about improvements, what is the single biggest operational bottleneck inside the Bureau today that, if fixed, could immediately lift collections further?
Two things, no? I think we really need to have a new customs processing system. The old E2M system slows down and is not very much responsive anymore to new trading practices. Number two, I think we need to talk to our respective ports for them to improve their facilities. We need more designated examination areas and we need more movements to our partner ports so that we can accommodate more volume and we can boost trading economic activities within the country.
Okay, thank you very much for joining us this morning. Attorney Vincent Philip Maronilla, Assistant Commissioner of the Bureau of Customs. Thank you, sir.
Thank you, Robert, and good morning.
Stay with us, more business stories and the signals behind them when Business 360 continues. Investors expect higher borrowing costs in a slowing economy, but Philippine government bond yields move the other way. Yields fall across most tenors as weaker than expected Philippine economic growth fuels fresh bets on further rate cuts by the Bangko Sentral ng Pilipinas. Short and medium-term yields lead the decline. Markets price in policy support after full-year GDP growth misses government targets and marks the slowest pace in years outside the pandemic. Analysts say the soft growth data strengthens the case for monetary easing. Long-term yields stay mixed as global factors, including a cautious U.S. Federal Reserve, temper the rally. Markets now turn to January inflation data and this week's Treasury bond auction for clearer signals on the BSP's next policy move. This means lower borrowing costs may be coming, but the pace depends on inflation and global central bank signals. In Metro Manila, office tenants are shrinking their footprints but paying more attention than ever to flexibility. While developers once prized long-term leases and custom fit-outs, multinational firms are now chasing ready-to-occupy cost-efficient spaces. Real estate company Colliers Philippines reports that occupiers are prioritizing capital preservation, faster move-ins, and predictable costs as hybrid work reshapes demand. Grades A and B plus offices with OPEX-led leases are gaining traction as planning cycles shrink to just 18 months. Fit-outs costs in central business districts, which once ranged from 45,000 pesos to 70,000 pesos per square meter, are becoming a major friction point, along with delays in permitting, procurement, and construction. Vacancy in Metro Manila stands at 19.8% for the first 9 months of 2025 and is expected to edge slightly higher to 19.9% in 2026 before steadily declining to 19.2% by 2028. Traditional occupiers take about 830 square meters, government tenants 1,500 square meters, and shared services operators 3,000 square meters. Office value is no longer just location or rent, but speed, operational readiness, and risk mitigation. Flexibility is the new currency in Manila's evolving workplace landscape. The Philippines is pouring money into digital growth, but the weakest link is not the hacker, it is everyday users. Analysts warn cyber literacy gaps are slowing the country's digital economy push, even as security budgets rise. Experts say poor cyber skills among ordinary users leave systems exposed to attacks despite well-funded and highly trained security teams. A 2025 Cisco report shows just 6% of organizations in the Philippines have mature cybersecurity systems. The country also ranks 27th globally in cyber literacy skills. That matters as the digital economy accounts for 8.5% of national output in 2024. Without building basic and advanced cyber skills, digital growth accelerates risk as fast as revenue. The fight against corruption in Philippine healthcare may be turning to money from the outside. As pressure mounts on the Department of Health, a U.S.-based Filipino doctor is floated as a possible replacement for Health Secretary Ted Herbosa, who faces growing corruption allegations. Amid intensifying calls for Herbosa's removal, Dr. Ronald Rigor emerges as a standout contender. Rigor is a Beverly Hills-based physician known for catering to Hollywood stars and a multimillionaire with substantial personal financial resources. If appointed, Rigor signals willingness to renounce his U.S. citizenship and anchors his proposal on zero-balance hospitalization aimed at eliminating out-of-pocket costs for admitted patients. This sharpens pressure on Malacanang to act on governance and accountability. It signals a high-stakes bet on unconventional, wealth-backed reform to restore public trust. Gig work in the Philippines promises freedom but leaves workers unprotected. Labor groups are pushing the government to overhaul social protection and require SSS coverage for platform workers. They urge the Labor Department to issue binding rules to replace private insurance schemes used by digital platforms which fail to provide basic security. Citing Supreme Court rulings that classify platform riders as regular employees, advocates note current advisories do not guarantee retirement, sickness, or unemployment benefits. Building on recent legal wins, the campaign seeks to formalize protections for both platform and media workers. This could transform gig work into a safer, more stable livelihood, giving millions both flexibility and security. As passenger numbers fall short, the Philippine Ports Authority posts an unexpected win, surpassing its 2025 cargo target. The PPA logs 307.64 million metric tons of cargo, a 6.3% increase. Foreign shipments total 103.10 million metric tons, while domestic cargo reaches 114.55 million. Container ports anchored the expansion, with volumes up 9.31% to 8.57 million TEUs. Passenger traffic, by contrast, misses its goal at 82.42 million. For 2026, the PPA forecasts cargo to rise to 320.94 million metric tons and passengers to climb to 87.26 million. The numbers underscore a trade-driven port sector, even as people movement remains below targets. Cheaper pork is hurting the very farmers who raised it. Hog raisers are urging the government to bring back higher tariffs as imports flood the market and pushes prices down. They want duties increased to 40%, arguing that temporary cuts set in 2021 after African swine fever remain at just 15% and 25%. Pork imports jumped roughly 16% last year, topping 850 million kilos. Meanwhile, average live hog prices fell 14% in the fourth quarter, landing at 182.83 pesos per kilo. The Agriculture Department has responded by raising the floor price for live hogs to 210 pesos per kilo. Farmers continue pressing for tariff hikes and tighter import controls. This could mean higher costs at the checkout counter and renewed debate over balancing affordable pork with protecting local farmers. One of the Philippines' most prominent property dynasties now faces the glare of the law. The Securities and Exchange Commission moves to prosecute Manuel Villar and Villar Land over alleged market manipulation and insider trading. The regulator has filed a criminal complaint with the Department of Justice, accusing the company and its directors of misleading disclosures that distorted share prices. Central to the case is a massive land revaluation reported before audits were completed. Named respondents include Cynthia Villar and their children, alongside related firms accused of trades that artificially boosted demand. Villar Land says it will respond once it receives the complaint. The case highlights corporate disclosure and market conduct as the SEC signals it is intensifying enforcement to safeguard investors. This marks a critical test of transparency and accountability in the property sector. Up next, global markets, what's moving and why. This is Business 360. The obstacle to international flights at Bicol International Airport is not demand or destinations. It is power lines. Transportation Secretary Giovanni Lopez now orders the Civil Aviation Authority of the Philippines to allocate 200 to 300 million to relocate national grid of the Philippines transmission lines, blocking full runway use. The move unlocks jet operations, lowers airfares, and positions the airport for international flights while boosting tourism in the Bicol region. With interagency coordination and support from Albay Governor Noel Rosal, airport operations are set for a major upgrade. This signals how targeted infrastructure fixes can quickly expand connectivity, tourism, and regional growth. The country's top anti-corruption official publicly rebukes the very agency tasked with stopping illicit funds. Ombudsman Jesus Crispin Remulla storms out of a meeting with the Anti-Money Laundering Council, calling the council disappointing and inept. The meeting, chaired by Central Bank Governor Eli Rimolona Jr. turns tense as Remulla criticizes the council's handling of the flood control scandal. He accuses AMLC of a freeze and float approach, slowing the freezing of assets to profit, and warns they failed to consult other authorities like the Ombudsman and the Department of Justice. Since the scandal made headlines in the president's sauna, AMLC has frozen nearly 25 billion pesos in assets. That includes properties, vehicles, aircraft, and investments linked to individuals under investigation. This exposes gaps in anti-money laundering enforcement and raises questions about coordination between financial regulators and oversight agencies. A new model for progressive taxation emerges as Pakistan upholds a super tax on high-income individuals and large corporations. The move shows that governments can legally demand higher contributions from the wealthy, ensuring those who benefit most economically pay their fair share. The tax is expected to generate 310 billion Pakistani rupees or 65 billion pesos for Pakistan's public coffers. Here at home, ordinary citizens carry the weight of regressive consumption taxes, and Pakistan's president offers legal and political cover for reforms aimed at greater equity. Government projects are picking up speed, but DM Konsunghi Incorporated, or DMCI, one of the leading engineering-based integrated construction companies, is ready to turn delays into dollars. The conglomerate is positioning itself for the next wave of multi-billion peso contracts. It plans to bid through a consortium of 3 firms, targeting the Bangko Sentral ng Pilipinas complex in New Clark City, which will relocate currency printing from Quezon City. DMCI is also involved in traffic decongestion programs, housing cost reviews, and rail infrastructure coordination. The private sector is moving fast to capture delayed but imminent government opportunities, aiming to secure contracts across both national and local projects. This signals faster execution of key infrastructure, with private firms helping turn long-planned projects into reality. The world's top selling Philippine rum brand Tanduay isn't just raising a glass, it's raising its global ambitions. The liquor giant is setting its sights on international markets. Tanduay targets Europe, including Slovenia, Slovakia, and Hungary, aiming to grow its overseas presence. Exports currently account for less than 1% of total sales, yet the company is seeing 15 to 20% growth year-on-year in these markets. The firm also plans a return to Australia and expansion into New Zealand, with a goal of reaching 100,000 export cases annually. Tanduay's push highlights how local brands can leverage global demand to boost revenue, elevate the country's presence in international markets, and inspire other homegrown companies to think beyond borders. Let's take a look at global markets. U.S. stock futures are mixed after a Bitcoin slide, and a sharp sell-off in precious metals ends as volatile January. Dow futures are up about 0.1%, S&P 500 futures are flat, and Nasdaq 100 futures are down 0.2% after stocks fell Friday but finished the month higher. Investors are bracing for more tech earnings this week, while markets also weigh President Trump's plan to nominate Kevin Warsh as Fed chair, with analysts flagging near-term uncertainty over monetary policy. In Europe, heavyweight banking stocks led London's FTSE 100 higher on Friday. This puts the index on track for a 7th consecutive month of gains, poised for its longest monthly winning streak in over 12 years. Let's check on how the Philippine Stock Exchange is doing this morning. The PSE index opened in the red, trading at 63.05. Majority of the sub-indices are in the red, with decliners currently outpacing advancers 88 to 64. Total value is at nearly 2.4 billion pesos. On the currency front, the peso opened at 58.9 against the dollar, down from its previous close of 58.86. From Manila to Paris, Heart Evangelista Escudero is turning the spotlight on music as she marks her return to Paris Fashion Week. The actress and global fashion icon shares an original song dedicated to her team and supporters. In an Instagram video, she plays the piano alongside highlights from the event, expressing gratitude for everyone who made her comeback possible. Evangelista attends shows by Hermes, Schiaparelli, Kenzo, and LGN, appearing alongside personalities like Nikki Hilton and Olivia Palermo. Her presence celebrates a journey from a little girl with big dreams to an international fashion figure. Her return signals not just global recognition for Filipino talent, but the growing influence of local creatives on the world fashion stage. At the Grammys, the real headline isn't always the music. The 2026 red carpet is stealing the show, turning celebrities into walking billboards for global fashion brands. Stars arrive in high-end designer looks at the Los Angeles venue, giving luxury labels instant worldwide exposure through live coverage. Stylist-driven collaborations are now as much about marketing as style. Every outfit sparks trend talk and brand buzz, proving that what's worn off stage can resonate far beyond the music. This underscores the growing power of entertainment as a platform for fashion marketing and hits at opportunities for local brands to capture attention on the global stage. And that's it for Business 360. I'm Robert Tan, sitting in for Mikey Oreda. Thank you for joining us. Keep it here on BNC, the Bilyonaryo News Channel.